all those groups, Vanguard, Merrill, Bank of America, are very tightly aligned with Ms. Warren. If you look at Ms. Warren's biggest contributors, guess who they are? And she or someone like her made a call and said, don't allow your customer. Now, I find irony. In fact, if you look up the term Vanguard in the dictionary, it says embracing new ideas, being on the leading edge. That is what Vanguard means. And they're saying you can't spend your money on something you want to buy. That's like the antithesis of the name of the firm. And it's funny, I did a hashtag right after it happened, said set sail, right? Just leave. You don't have to stay. Right. And someone did a great thing. They took their logo, which is an old Clipper ship, and they made it sick.
Yeah.
And I just love that because people are going to vote with their feet. Now, the flip side of this is what they're saying is all you young people, all you millennials, Zoomers, we don't give a shit. We got the boomers, and the boomers don't want this. They want us to be the buttoned up Wall Street types to say, no, this is bad. That's fair. That is a calculated decision, I will argue, made by boomers, because boomers are the ones running the firm, that has a limited lifespan.
Right.
Because here's the thing. All of us, every single one of us is going to die.
Yep.
Every single one of us. I mean, everyone eventually, but the boomers first. And we're all going to die. And all that money that we think we have is going to y'all. It's going to the Zoomers and the millennials. And so if Vanguard and Merrill Lynch and Bank of America and UBS piss off those people, what's going to happen?
Mm-hmm.
They're just going to leave.
Welcome back to Money 101. Mark Yusko, founder and CIO of Morgan Creek Capital, has long sounded the alarm about alleged conspiracies hindering the cryptocurrency industry's growth in the United States. While some initially dismissed these warnings as mere conspiracies, recent events have provided the first hints of behind-the-scenes activities. Following the approval of Bitcoin ETFs, major asset managers like Vanguard made announcements restricting access to Bitcoin products on their platforms. Notably, institutions such as Citigroup, Merrill Lynch, State Street, and UBS also denied client access to these new Bitcoin offerings. Vanguard, in a social media statement, clarified that they had no intentions of offering a Vanguard Bitcoin ETF or any other crypto-related product. In a recent interview, Mark Yusko delves into the intricate connections between these financial institutions and anti-crypto figures like Elizabeth Warren and SEC Chair Gary Gensler. He asserts that this situation represents a classic attempt by established entities to stifle the growth of the new and maintain control. However, Yusko concludes the discussion by outlining why he believes Bitcoin and crypto are inevitable at this point, forecasting a potential $100,000 Bitcoin this year. And hey, if you find this finance content valuable, don't forget to hit that subscribe button. It's free, and you can always change your mind.
What does Jamie Dimon do? He runs the largest bank in the world. Well, second largest bank of international settlements, bigger, but he runs one of the largest banks in the world. He's a really powerful guy. So, wait a minute. What does blockchain technology do? It does to financial services what the internet did to media and commerce. Mm-hmm. Right? Amazon exists because of the internet. And mom and pop shops, a lot of them went out of business because you can buy it from Amazon. Same thing's going to happen to finance. So he runs a financial services firm that is threatened by this new technology, Bitcoin being one manifestation of it. And so, yeah, he's nervous. Yeah. My other view is you can always judge the quality of an idea by the quality of its detractors. Mm-hmm. Right? If you have an idea and no one who's important or meaningful hates it, it's probably not really that big an idea. If you have an idea and people who have power and influence don't like it, you're onto something. And you can go back in history, from, we said Martin Luther King Day, right? He had some detractors in really high places and probably ended up, costing him his life for that, right? For taking a stand for human rights and civil rights. But if nobody cared about that, then it wouldn't have been a big idea. But it was a really big idea.
Yeah.
And one I personally am very grateful for him, starting it, or not starting. He was one of the people that started it. And that's why this is so feared. But just like every innovation, right? The internet was feared, air travel was feared,
Automobile.
the radio was feared, television was feared, electricity was feared. There are these great pictures from the 1900s.
Oh, yeah.
Electric wires and these demons coming out like it was going to ruin the world and it was going to poison everybody. No, electricity is awesome. It makes my life so good. It makes what we're doing possible. And blockchain is the same thing. Bitcoin is the same thing. So it's big. It's here to stay. And here's the thing. There's 30 trillion in boomer accounts managed by financial advisors. It's a lot. 30 trillion. If 10 basis points goes into these ETFs, okay, that's $30 billion on an asset that trades about $10 billion a day. That'll move the price a lot. If 1%, which is not even crazy, 1% should be like the minimum you should put in. I'd argue 2, 3, 5, 8, 10, but 1 is the minimum. That's $300 billion on an asset with a current market cap of around $900 billion. So we're talking about a really, really big growing demand. And what people forget, when GBTC launched, they raised about $10-ish billion of new fiat that went into GBTC. And the price of Bitcoin went from about 10,000 to 59,000 in a matter of months. I mean, it was a total parabola. And yes, then it crashed down to 30, and then it went back to 69, and then it crashed all the way down to 15. And today, we're closer to 69 than we are 15. So that, I think, history is going to rhyme. And so as that parabola, as that FOMO picks up later this year, post the halving, and we get into what's called crypto fall, which is when all of the activity and the media attention, and I think we could go very, very quickly from where we are today to 6-digit Bitcoin. I mean, like faster than people can imagine. I think this is the year, 2024, I think is the year where people finally understand that Bitcoin is digital gold, right? I mean, gold is this amazing asset. It's an asset that is money, right? It's actually one of only 2 or 3 monies in the world. Money is an asset that exists in the absence of a liability. Everything else that we think of as money, dollars, yen, euros, are not money, they're currency. Currency is backed by debt. And money has to exist with no associated liability. And it has to be given value, ascribed value by use and custom. Okay? And I love that there was a video years ago of a guy selling yak meat, like back in ancient times. And this guy walks up with a chicken and gives him the chicken, he gives him the yak meat. And then a guy walks up and gives him gold. He's like, the hell is that? Well, it's gold. So what do I want that for? I can't eat it. I can't use it. I mean, I can't sell it. He says, just trust me. It's going to catch on. And the idea that a piece of shiny yellow rock would be the thing that we all for 5,000 years would use to ascribe value, well, the reason is because of scarcity, right? The stock to flow ratio, the amount of new production relative to what's used or lost or stolen is roughly equal. So the stock, okay, the amount to flow is very high. which means your scarcity value is very high. Well, Bitcoin actually just passed gold in terms of the stock to flow, the amount that's created every year versus what's lost or stolen. Okay. And that stock to flow ratio means that it's very scarce. Well, scarcity is one element. You also need something to be portable. Gold actually isn't really that portable. And the real problem with gold is it's not very divisible. Like if I had a bar right here, right now, and I wanted to break it in half, and I think I'm pretty in shape guy, but not really, but I'm not strong, right? I could not break that bar of gold. Even if I were super strong, right? Even if I were Arnold, right? And I could, even he couldn't do it. I could stuff it into my computer and send it to you.
Right.
Well, I can hit a couple buttons and send you Bitcoin, like instantaneously. And I could do it to 100,000 units, Satoshis, 100 million units per Bitcoin. And this is, I feel sorry for Samantha. She's a very nice lady, Samantha Dulac, and she basically just misspoke, right? And said, well, I don't understand. It's Satoshis. That just means it could be infinitely divisible and create infinitely more. It's like, you mean if you take a pizza, you can cut it into infinite pieces and feed the world? Really? Is that what you're saying? There's still one pizza. But anyway, so I feel badly for her. And as I say, she's a very nice lady. But Satoshis are just a devising unit that allow us to not have to think in full Bitcoin at $50,000, but right, in terms of pennies or Satoshis. So ultimately we'll get to that point, and there's lots and lots and lots of Satoshis, 2.1 quadrillion, which is why my hashtag on my Twitter handle says 2.1 quadrillion. But that's where we're headed, and divisibility, portability, and this idea that triple entry accounting is just better. It's a better system. I think we hit six figures. I do these 10 surprises every year, and one of mine was, that we hit six figures. We definitely take out the all-time high. That could happen in days, right? Sure. Once people realize that these ETFs are taking out more Bitcoin out of the market than is mined every day, and after the halving, it's going to be 2 or 3 times that. So it's just supply demand problem. So we have the demand shock, and basic supply and demand, right? If demand goes up and supply is fixed, P1 is higher than P2, basic economics. But if then supply shrinks, right, P2 is higher than P1. So we're having a demand shock right now, and we're going to have a supply shock in April. We're going to go from 900 Bitcoin a day to 450. You put those two things together, number go up. And then we haven't even talked about the FOMO part and the leverage part and the stupid part where, dumb people play dumb games and win dumb prizes.
Yeah.
And people will lever up again, which is not smart. Why would you ever lever up an 80 vol asset?
Mark Yusko unveils the intricate resistance landscape opposing the rise of Bitcoin and the broader cryptocurrency sphere, showcasing the careful maneuvers of major asset managers like Vanguard and the skepticism voiced by influential figures such as Elizabeth Warren and Gary Gensler. It's evident that the path to cryptocurrency acceptance is laden with formidable challenges. However, amid these obstacles, Yusko weaves a compelling narrative, emphasizing that the forces of innovation and progress, though often met with resistance, are ultimately unstoppable. His insights penetrate the core of this financial evolution, underlining the inevitability of cryptocurrencies and daringly forecasting a future where Bitcoin may ascend to unprecedented heights. Anyway, folks, trust you found today's video enjoyable and enriching. I'll catch you in the next one, and as always, wishing you all the best.